You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hello, everybody. Now we're getting close to the end of the year. Amazing. This year just flew by with its wild ups and downs and crazies with supplies, with variants, viruses. How did we ever live through it? My God. Well, the market's up for the most part, did pretty well, but it's been a wild ride, and there's some crazy moves this year. We'll review some. And going into next year, odds are that things probably, the volatility may stay the same, but I don't think we'll have the same ascent that we saw. I mean, we saw breakout failures and some tremendous consolidations, the small caps and the retailers, a consolidation for a year that broke out and failed. So I'm hopeful that next year might return more to the norm of, we're going to have our ups and downs, we're going to have our corrections and so on. And there may be the possibility of a bigger correction, with Fed beginning to tighten. We'll get more information on that today if the yield curve begins to narrow further. So, but this is what we do. This is what we've been doing for a few decades. We've been through a lot of ups and downs and some real nasties and through some great times. And so things, I like to say, are the same but different. And as time goes on, we get more experiences in no matter what we do, whether it's the markets or anything in life, which makes us better if we survive it, of course. So let's take a look at what's happened and where we're going.
Good afternoon, everyone. Yep, that's actually a great subject for the end of the year. And you can, look at the title. We're going to be looking at, hey, should we be looking at junk patterns? Are the Fliers going to keep going? What about our bias for next year? And you kind of added your comment, Greg, but when you said, oh, maybe next year will be more calm than now, that was my reaction, was really with the Fed in tightening mode. We just like using our approach. We trade anything that moves multiple time frames. So whether it's up, down, or sideways, we will be able to take advantage of it. And, today we're going to go through the slides are purposefully fewer today, so we can spend more time on the broader markets, market internals. If you want to get into yield of what could be a warning sign of the inverted yield curve, and a couple of sectors that we want to put on our watch list into the end of the year and to next year. We always start with this slide right here. Why? Because it's our approach. It's our approach to trading anything that moves on any time frame. We're technicians, so we need, give me a price pattern that suggests the probability of that pattern going in a certain direction. Then we put that pattern in connection with the trend, support and resistance, multiple time frames. We'll talk about market internals. Once you have a high probability setup, then you just enter and manage in between per your trading plan. That's all trading is. We're exchanging the underlying, which is stocks, options, commodities, cryptocurrencies, futures, ETFs, and anything. But this is our approach to trade anything. So, I went through that high probability setup, then you just, and this is a difficult part, Greg. We've touched upon this a lot in our trading plan, MT Live. But once you have a method in a trading plan and you know what you're looking for and you know how to execute it, then The emotional difficult part is, okay, we'll have the patience and discipline to follow the plan that you just learned and crafted out. And today, for example, I didn't hit the mouse once. Nothing set up for my personal strike zone, as I call it.
Oh, everybody, we always hear this, Dan. We say it, everybody says it. The psychology part is a big part of trading and so on. And so sharing my own experience, which is what we do, why is that? And the reason is there's always some type of uncertainty, but primarily we are our biggest enemies, which relates to changing timeframes. So, and I'm thinking of that because I had discussion with subscriber in the chat room yesterday about managing a trade. And part of the problem with that subscriber was she wants more than what you can get from the discipline of trading a time frame, meaning she wanted the bigger gain that could be provided by a bigger move, but she wanted it to manage it because she didn't want to give anything back of what she had.
We all do.
Smaller time frame. So we can't have our cake and eat it too, as the saying goes. But the psychological part, and of course the discipline part, is to say, look, I'm going to trade from, let's say, the daily time frame as a swing trade, and based on what you and I shared in these MT lives, Dan, is this is how we manage the trade. Now, we're not going to say that this is perfection, but it's pretty darn good. And if you can stick to that, well, the emotional part gets a hell of a lot easier.
You know what, Greg? There's so many key slides that you've prepared over the years, and the one you're talking about now that jumps out of my mind is called Pivots for Exits. And we've had entire MT lives on that, so to speak. And that is such an amazing slide because it tells you how to objectively try to get those bigger gains. But we can talk about that when we look at real charts. So why don't you tell them a little bit about this, Greg? You kind of coined this.
Yeah. So, going back, 30 years, 25 plus years, and looking for the Holy Grail, right? We all look the Holy Grail. What'll make me money and never lose me any money? We all know that there's no such thing. But through a searching of why did this trade work, and this trade, which my perception was basically the same technically, why did that one not work? And it all came down to, well, there's the technicals, which you have to understand, part of your trading plan and money management, all that. And then there was these market internals. So while I might be trading XYZ, the big picture, the broader markets weren't in alignment with that at the time. In other words, so XYZ was a breakout, but the market had already moved, and the internals told me from a broader point of view that, hey, the market is done. It's reached its destination. So this pattern wasn't likely to work out. That was one thing. And then there's intermarket analysis, meaning how to do interest rates, which are a big thing right now. How do interest rates affect financials? How does oil affect transports? How does interest rates affect, buying, retailing, and so on? So these three things that I coined the three-legged stool is related to trading the big picture and seeing when are they out of alignment, when are they in alignment, when are things changing. And so that was a big part of the investing part, and then to some degree the swing trading part, intraday trading, somewhat so. But intraday trading, it was kind of like, Dan, our conversation you and I have amongst in the rooms every day between you and I, and it was like you were looking for the answer. What happened between yesterday and today? And it's like, well, that's in what happens between yesterday and today is basically a coin flip on many days. And to figure that out becomes brain damage, but it's good conversation.
Absolutely.
Yeah.
And so our approach, whether we're swing trading or position trading or day trading even, it's the identical approach. To give you a one-line simple way of how to use multiple time frames, the pattern comes from the time frame that you pick. Go up one time frame, don't fade it, which means fight the bias. You can go down one time frame to perfect your entry. So we trade all time frames. This morning, as I said, any trades were scalps only. This is we're not jumping ahead here of the FOMC. A lot of charts damage, which we'll look into, and we'll obviously do some scanning here momentarily to see what about a longer term trade where might be opportunities be lurking. So these are just a sampling of bullish patterns on the first slide. That's what this is talking about. Give me a tradable pattern, and then apply the other concepts of master trader strategies before you enter and hit the mouse to enter the trade. So any chart that we look at, this is what we're focused on first. There's the pattern, then the other concepts of overlaying to improve the confidence of the pattern working out for what the bias suggests.
Yeah, what you're saying there is what we do, right? And so one of the things that I found with reviewing my own trades or mistakes and what we learned from was that once we learn these patterns, and we tell this to subscribers and in the room all the time, that's one element or one concept of what we do. And so there are times where like you see this pattern and it's like, okay, that means this, it's going to do this or that. But then, and because we're focused on primarily the money, which we have to be, but we, has to be our trading plan and all that. I'll say I placed the trade and it's like, what the hell happened there? It didn't work. And it's like, I saw the pattern, but did I make sure about the relative strength and weakness? Did I make sure about multiple time frames, the other elements of my trading plan? And so while we review this slide every week, because this is what we do, there's so much more to it. And that's what every MT Live builds on.
And once you take your course and get the seasoning, that analysis of those other pertinent concepts is when you get to what we call, the unconscious competence. You don't even think about it. As soon as we pull up a chart, you and I both say it's a no-brainer. Yeah. And that's, that's, you start with education and you get seasoning, and that's how you get there. All right, so our three-legged stool, this is what we're looking at. So this is the S&P 500 ETF, and we use these market internals. And, in the past, we might have looked at a whole lot more to thinking that we're getting more, more accurate data. But these two in combination work fantastic. And Greg, when we look at real charts here in a couple minutes, a week ago Monday is when these were in such bullish alignment that started that last week's incredibly bullish 4% rally. So here's what they are. Sentiment, that's this gauge. We want to know how bullish or bearish what we call the wrong way option traders are at extremes. Both of these are extremes. Both, this last bullet, both have to be in alignment, and then they give her a trigger to danger, danger, danger. The market's either at an overbought, oversold turning point. They've done their job, then you just totally focus on price pattern for your trades. They don't
Dan, and I think it does say that here, and I wrote it years ago to explain this, but in reality, it's really not overbought or oversold. I mean, and it's kind of a measure of that, but I just don't like those terms.
Okay.
What it really means is that things have moved to extremes. And that's what it measures extremes where things have moved too far. Now, you might look at a particular stock or a market and say, you know what, that thing's overbought. Well, you're saying probably based on an indicator, and another thing I say is, well, overbought can become more overbought.
Right.
And so these internals actually measure historically when thousands of stocks, breadth, have moved to a historical extreme. So in unison, they've moved together to a point where historically things have retraced, pull back, not crash, correct.
Right.
And the sentiment is, and when we say wrong way option traders, it's not to say all option traders are wrong or that they're always wrong. It's just that when the majority are moving together in one direction based on historical measurements of what is extreme, and it comes together with stocks doing that, the probability is things are going to pull back or correct sideways. And Dan said years ago, I mean, I probably used to look at, I'm just guessing, 25 different internal gauges, newsletter writers, are they bullish or bearish, and all different stuff. And it's like, this is like so much to deal with. What are the two primary things about the markets that tell us that things have gone too far? Breadth, because it's a broad measure. And when traders that are especially using leverage to bet that something big is going to happen, and something big has been close to happening already, the odds are that it's not going to happen. So things can be extreme and these internal gauges not be extreme, which tells us there's still more gas in the tank. So it's an objective measure rather than me just thinking, oh, this has moved too far.
Yeah, perfect. All right, we kind of covered this already in the other slide. So swing trading, position trading, day trading, we're going to be looking at multiple time frames. I explained time frame, don't fade the lower. You can go one down. This is slide I just put in because we're today talking about the flyers and, and the junk and looking for opportunity. So this is an important concept. If we're going to be looking at a strong trend, which I'll show you Apple in a second, we have to objectively know, well, do we think this particular trend on the time frame you're looking at is going to continue? And these are the attributes. Okay, so I have higher highs, higher lows, which is an uptrend. Here's my igniting breakout from multi-month consolidation. I have red bars ignored. It retraces over time. I have controlled candles, not large, whippy, overlapping. I have parallel 20 above 50 that's not extended from it. That's still a strong trend. So, just keep some of these traits in when we're looking at anything to answer the question of, is it a top or is it a bottom? Or can I get on board this moving train right now?
So I just marked the unfilled gaps. Many believe that gaps get filled, and that's not true. You don't want to see them get filled, especially, when things are just getting started. You can see here the moving averages were close together. And then rather than pulling back, it went sideways, which was that point right there.
And that was
candles.
And that was a big gap. Ignore the price. That's a big gap.
Right. And so controlled candles, they're not overlapping like Dan mentioned. And for the most part, other than the igniting part, they tend to be about equal in range, give or take, not exact. So that's what controlled means. RBIs, hey, it's going to pull back. There's a topping tail bar and it's red. It's going to pull back. Well, no, it didn't happen. It went sideways. That tells us that demand is very strong. Where, just generally speaking, you say, well, I'd rather pay less because it's up a lot. Well, someone else is saying, you know what, it's going to go higher and I better pay up now. So this is objective information that tells us what institutions are thinking. Red bars ignored and sideways corrections versus price corrections. So that's sideways rather than retracements. Consolidating at resistance. Well, this chart doesn't have any resistance. So, it went sideways. Let's assume something was there to the left, or something was here to the left, and it went sideways. So it builds support. So these are kind of like a checklist, if you will, right, of all the concepts that we cover in the MTS, our method and the courses, to explain in great detail what all of this means. So
Right.
here in a real short, manner here.
No, right, because you and I just look at this and come to the conclusion that's a power strong uptrend, and then a new person says, "Well, why?"
Right.
So it forces us to do what we did and say, "Okay, so why is this?" And we take it piece by piece and put it together, and there's your course.
Right.
All right, so these I grabbed pre-market here. Will these uptrends deliver similar returns for next year? Here's the weekly chart of the S&P 500. It's in an uptrend. I should have written down the percent gain that we've had, but it's up huge. Here's the last year, and it's mid-December.
You're talking about this year?
Yeah, this year, S&P weekly.
S&P this year is up 23%.
There you have it. So the question is this trend going to continue?
Well,
should I buy spiders right now, expecting a 23% return next year?
We don't know. I mean, you could say, should I buy it right now, which would be based on, do we have a pattern right now based on this weekly time frame? And we kind of do. It's not a clean 1, 2, 3, but it could be. It could be a breakout.
Right.
We don't know.
Right. It'd have to trigger over the highs, though. And then, as you said, multiple time frames. We're concerned about the daily deterioration, which we'll look at in a few moments here. So this is Apple. How much is Apple up in a year?
Hold on, I'll tell you.
Everyone on the media was talking, like, this is this morning's chart. So
43.69%.
How much?
43.69. No, wait, that's XLE. What? Apple is up
Probably close.
30%.
Okay. All right. So this also, folks, relates to the market internal of sentiment that we talked about, which is people read that, it's in the news. The media the other day just couldn't stop talking about Apple, $3 trillion. It gapped up the other day on Monday. And we in the green room were saying this looks like a tradable short-term high, that there's too much bullish sentiment after an extended move. And, the opening print on Monday was pretty much the high for the week. So the question is, well, should I still trade Apple or sell it? And it depends the time frame. There's no pattern here. We would never enter this one as a new trade on the weekly because it's too extended. It's what we call a climactic sell setup. This one, as Greg said, is not as extended and could be a breakout failure, could be a 1, 2, 3. We got Fed, we got more news. We don't know yet. Before trading bottoming patterns. So, here in a few moments, Greg's gonna look at junk, which is things down the worst on the day. And then we have tax selling by funds and so forth that want to get rid of the junk off their balance sheet so they can show the nice ones, and that'll put pressure on the junk to go even lower. And we don't mind buying junk, provided it meets our first slide that we covered, which is pattern and go through the other trades. We love junk. And we also love selling extreme bullishness with the same approach. We recently did MT Live on trading bottoming patterns, so I just threw this in here. But these are some key concepts that we look for. We need a bottoming pattern. We call it this event. we need something to jump out to say, I got you. It was a breakdown failure. It was a gap reversal. It was a big bottoming tail. And we'll show you a number of examples on that here. This is just wanted to throw this out because this is a beautiful pattern for trading these beat up bottoming stocks, and even the topping stocks are M reversals, but we need a big price void. It goes up and we have a retest. 3 different flavors of them. And there was actually we've been building a big list of these just for short-term trades on the daily charts, but we don't know yet if they're going to turn. They just make them watches. So Greg, talk about these 2 junky sectors. So the title is, do these beaten down ETFs offer better opportunities than buying spiders or Tesla? What do you think?
Potentially, this is coming down to support like it did a year or so ago, and it did this retest. But the difference is this one was more like exactly the other slide on a monthly time frame.
Let me highlight that for him. Yeah, Greg's saying, see this beautiful W bottom. Well, it was a higher low, but that's why we give you different flavors. But go ahead and take it from there.
This retracement was shallow and then retested, where now it went all the way up, and this is real, not a bad data. And then it came all the way down. So while this is a retest pattern, it's not this.
Without a doubt.
Yeah. So this can offer us an opportunity because we say, look to the left, it's at support. There were buyers there before, there are going to be buyers there again. Now, we can drill down to a smaller time frame, like to a weekly or even a daily, to get the details of how this turn occurs, and we can trade that. But this is going to be a sticking point right away. In other words, this decline, it's not this, not the shallow. It doesn't offer the same potential opportunity. This type of a pattern historically needs to go sideways for a longer period of time than this. So it's different. This one here, I don't like that so much, Dan. I mean, it came down hard. It's shallow. There's nothing to do here. It's just wait and see if it actually turns.
Without a doubt.
That tail.
Without a doubt. That's why I'm giving the good, bad, and the ugly. There's no opportunity. I don't like either one of these for long-term trades. As you said, if we get a W bottom, we're watching it on the daily chart. It's just a, 1 to 5 day trade. I don't know. But, we're going to look at charts here in a minute, so we have more time for looking at the market. I just picked some beaten down sectors, and there's no pattern here. So that vetoes our interest right off the bat. I got no interest in this. There's no pattern. This was a tradable bounce, particularly on the smaller time frame, but it's already failed. You got in for 1 to 5 day trade and you're done with it. All right, this is what we're going to do right now. So we purposely left a lot more time today. We're as if Greg is just firing up the computer on the weekend, and these are the steps we go through. We're going to look at the broader market index ETFs on multiple time frames, and you can look at whatever else you want, commodities ETFs. We're going to get a bias, and we don't do this every time, but Greg will just mark through his steps of analysis. And then if you have trades you want us to look at, we'll be happy to look at them. Otherwise, we're going to scan TC 2000, maybe look for the best performers, the underperformers, and we'll address the topic of today, which is, do we want to continue with the Fliers or fade the Fliers? Is there any junk that we want to put on our interest list? And that's what we're going to focus on right now. We have our yearly holiday specials here, which are the best prices of the whole year. We put them together in different little packages of seminars or advisory services, live trading room. You can check those out, mastertrader.com/, and look at the spelling, holideals. Greg gave you the full link right there. This is not the last show, so I'm going to get rid of that. All right, happy holiday anyway, but yeah, we have one more show before the end of the year. All right.
Okay, so what I'm going to do here, I'm going to take a real long-term view of things, and we're going to drill down relatively quick. And I'm not going to look at a
Whatever
huge
you
amount
want.
of different things.
Whatever you
But
want.
this is something that I review in the advisory letter on each weekend, is the S&P 500 ETFs. And these are yearly charts. And so as we look at yearly charts, and it's like, hey, you know what? I could have held on to that XLK. That wouldn't have been any problem at all. But from a yearly chart, each one of these bars is 1 year. What happened day to day could be a whole nother story. So these tails, looking at this particular, and it's not putting the name here, or the S&Ps, those tails are real. Meaning it went way down and came all the way back up again.
That was coronavirus bear market.
Yeah. So we look at this and say, is it extended? Well, yeah, but has it shown any signs of failure yet? No. It's been an uptrend for quite a while. It doesn't suggest the same opportunity today that it did here, where it was retesting, where things were close to the moving average. As we look at these and go through each one, they're still all going up. XLE, which is energy, had a topping pattern, but we're getting a 180 type reversal. So maybe it can keep going. All of these look like they can continue, they could go up. This one a little less so. So let's now go down and look at, I'm going to just do this quick. And that looks a lot different. That's still going up. Momentum stalled, but it picked up again. Sideways, still going up. Oh, this one is correcting. And this one's been correcting a lot lately. Looks like it could come down some more. This is going to form a potential sell setup and so on. So up, 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 up. It's black and white as to what's happening in those time frames. As we start changing time frames, things like, well, that looks a little different, like something could be going wrong. Going down to a monthly time frame. So now this looks like if it can come down a little bit more, it could be a good buy setup. It's still in an uptrend. This is sideways. It's correcting through time, but not breaking out. Momentum is slowing down. XLP broke out this month. Looks like it continued to go up. So, and we just continue with this type of analysis, and we have our longer term perspective and bias. And now, as we get closer to the price action, is there something that we can take advantage of right now? So this, we said we'd like to see it come down a bit more. And I've got an alert set at 70, which is kind of a measured move. This one looks like it should set up a buy as it comes down a little bit more. So what you do is just set alerts, like maybe it hits the 20 MA, maybe it goes a little lower. And I can just easily click on this and set an alert. And my 20 MA, I would just come down here and say, okay, on the 20, let me know when it's, again, this is the process. Some are easier than others. So price history versus a 20 MA is crossing down again below that moving average. So it's going to let me know when that happens. And so we pretty much live as swing traders in the weekly and daily time frames. So, and then in the daily, this one we had from up here, a monthly sell setup. Well, it was a quarter, but here was a daily, which means, yeah, it should continue lower. And again, longer term bias, you start drilling down to where we might want to be buyers from a long-term perspective, line that up on your daily charts. And this is what we go through. I go through and then report on this on a weekly basis in our advisory letter. This still looks like it can go up. So utilities and REITs, interest rate sensitive, as interest rates are coming down, these tend to do better. So that intermarket analysis part, you need to be aware of what's happening with interest rates. That's going to either positively or negatively affect these. And again, uptrends, and looking for opportunities in these various sectors. And of course, what we do is, okay, let's pick something here. That's in an uptrend. Well, I just click on that and then look at whatever, up a chart, and let's put up a daily chart here and expand it. And now we'd go through here and start looking at different stocks within that particular ETF. So it's what we call a top-down approach. What's happening in the broader markets, what's happening in sectors, and then we start going down to individual stocks. So consumer staples have begun to do better now that the markets have become somewhat questionable on what's happening with interest rates. And this is a defensive sector, as you can see. And so now Campbell's Soup, which has been doing nothing for a long time, is coming off of a low. And we can go through the same process, weekly, monthly timeframes. But you get the idea here. Hershey's is moving up a lot. We'd want to look at that on pullbacks. Costco's been doing great, but the momentum is slowing down. So our top-down approach, then we apply the same concepts to individual sectors and stocks. So now we can go, we're not going to get into this, but we can go into a whole lot of other sectors here that can show us what's happening, and something that we'll review, if I can find that ETF here, what's happening over years of time and where the money is flowing into and out of over a long period of time, and then go through the same process, market, sectors, stocks within those sectors. And this is kind of referred to as mining for gold in a sense, in the stock market, looking for what's done well and what's done terribly that might be turning around from a longer term perspective, and then finding individual stocks within those sectors. Now, this platform for internals isn't great. It used to offer some other things, but there's some good stuff in here. This was the breadth internal, which you can see is coming down. It was much lower. Markets aren't doing anything. And here, what I've got is stocks above their 200-day moving average. And one of the things that have been going on this year is that primarily the breadth has been terrible.
Wow, for 7 months.
Yeah, I mean, it's been Apple and Microsoft and Tesla and, those big names that have been driving the market. So, you just look at this and it's just the whole year, while the markets have gone up, this has been deteriorating. And so, you wonder why, the markets are up, and maybe you found things more difficult because it hasn't been so easy to throw the dart and find winners. And so, just like we look at these retest patterns, will this be a retest that'll lead to the next move higher? So while we see this pattern in many stocks and some ETFs now, looking at it from a broader perspective, we'll see if this actually turns around. So it just helps us make decisions with objective information versus maybe what we'd like to see happen. Well, things are in question. We're going to see what happens today. Now, as far as interest rates go, we keep an eye on short-term interest rates, but these are still flat, but they've been stabilizing. So what is the Fed going to do today? Well, this doesn't suggest they're going to be raising the interest rates, short-term interest rates. It's still flat. If the markets really believe that, this would start moving up already, but it is up since June. So the market's been saying that, hey, we're getting closer and closer, but we're not there yet. And then look at the 5-year. Since last year, it's been trending up. And here's part of what the markets are worried about here is that as this is moving up, you've got the 10-year, which has been flat, and the 30-year, which is actually moving lower. So these intermarket analysis, well, the markets are still looking good from a very long-term perspective and an intermediate-term perspective. If this continues to deteriorate, we know the Fed is going to begin to taper. That's a type of tightening, but they haven't raised interest rates. And raising interest rates initially has never led to a bear market. Corrections, but not a bear market. What you want to be watching for is this coming into alignment. This is at 12. Again, this is how it's really like 1.2. This is at 18. So they're still far apart. But as they begin to narrow, you begin to understand why financials aren't doing so good. Because these are getting closer together. And it's not the free money that it was before, where they're very wide apart. So this is something very, very easy for you to keep an eye on. This information is available at plenty of free websites. What's the yield on the 30-year? What's the yield on the 10-year and the 5-year? And so as these become closer together, once they meet and then that invert, you're going to have a recession. Now, historically, and this isn't my analysis, it's what I looked back decades ago. And the Fed did this, the Federal Reserve did this, where they did analysis, I think, on 20 or 30 different economic, let's call them indicators or measurements. The only thing with 2 different times in history where they did the analysis that was a excellent predictor for a recession was an inverted yield curve. All these other things were like hit or miss. So this is what you need to look at from a very long-term perspective. Is the likelihood of a bear market at this moment in time likely to happen? Well, trends are up and yield curves aren't inverted, but we've got something to worry about. Now, from there, advanced decline lines really have never been very good measurement of what's happening. But as we look at what, the broader markets, let's just take a look at, let's go over here. So we can look at a whole bunch of different ETFs and look at the broader markets. When we look at the transports, we see that recently they've been deteriorating a bit, but we have, from a longer term perspective, they look fine. They broke out, they pulled back, they backed off here, but they have not violated the trend on the monthly time frame. And the weekly time frame is actually more or less a bullish pattern if it can take out a prior high. But, that hasn't happened yet, but we're waiting. And so now, does this retest? Does it move back up? Ideally, it doesn't move back up, but even if you're not trading this, what you're going to do is set an alert like that. It's done. See if it goes off. And that's something that, hey, transports are moving up. You go back and look at those interest rates. Hey, they're beginning to spread apart again. The 10-year is starting to lift up. So why do those long-term interest rates start coming down? Because the markets believe that this economy is going to get worse. meaning, well, do these supplies open up? Does it get worse? Is there the demand there? So without being an economist, we can look at a few things that are really powerful, that tell us what's going on in the economy under the surface with our market internals, with our intermarket analysis. We can get into commodities, which let's not today, but all of these things guide us. And Don's asking about intraday charts here. I was saying there's a nice W on the 2-minute scalp. So all of those things that I just reviewed with you on a 2-minute chart are irrelevant. Right? What happens in the next 2 to 15 minutes is going to be based on smaller time frames. And as we look at that, and this is how I look at my 5-minute charts with these moving averages to what's happening in multiple time frames, hourly, 15-minute, and on the 5, trending down, sideways here. It's trying to bottom out. We've got news coming at 2 o'clock. Maybe, right? See the wide range bar, which is an igniting bar there, off of this retest and this pullback. Maybe we get a little rally into 2 o'clock or, thereabouts, and it's over, and we all sit back and wait to see what the Fed is going to do. The Qs have been the weakest for a while recently, which we can look at. And we see this topping pattern. The weekly is still in an uptrend, but there's a lot of uncertainty in the market. And how do I know that? I just remember the overlapping bars, one of the slides we covered. Right? Are these bars controlled? Well, they were here.
Right.
Not anymore. It's like, what the hell happened? I'm scared to death. Oh, wait, I didn't get hit by the car. Back down. This is crazy. So look, as anyone starting out in the markets, you're dealing with the uncertainty of what do I know? What don't I know? You're searching for, does somebody out there actually know anything other than wanting to sell me the latest, greatest holy grail indicator, right? Or what I'm telling you is what Dan and I are offering you is valuable, time-tested information over decades. Whereas, look, I tore my hair out, which we all do at the beginning, searching for the truth. And the truth is price. And all these other indicators are just a black hole. And so reading what others are doing, where I can see certainty, uniform ranges and how it's moving, that's clear to me. And this is clear to me that the opportunity that was here no longer exists. Can I trade this? Not in this time, not me. I can't.
Right, not in that time frame. Right.
I can't, right. But from an intraday time frame, yes, I can. But can I trade an intraday time frame better here than here?
Right.
Probably.
Absolutely, you can.
Well, it's probably likely to trend better. Whereas this kind of whip, if I can get in, be much more nimble, but it's like, can I drive a Formula One car at 250 miles an hour?
Yes.
Here, right? Or do I need, when I'm starting out, maybe, a Volkswagen, with a governor on it, so I don't go too fast, where I can pick smaller time frames and where things move slower to where I can make adjustments based on that time frame. And that's really the difficult part, is like, you want to drive the Formula One car, but you only have the skills, if you do have them yet, to drive on a slower path, if you will. Donna's saying spiders Spiders 2-minute. So we can look at that. Which was, this retest pattern was right here. And that's right before we started MT Live. I said that this is looking to me like might set up, but I don't see any W pattern here right now, Don. Oh, you're saying at 1224. Yeah, so this was the retest, more of a retest. But again, I think in the prior MT Live, we discussed this, that these W's, these retest patterns is going to be buyers, but the best W's have that very shallow retracement, because then they don't have very far to travel, to pierce this and then continue to go higher. Why that jumped like that? Maybe shorts covering, I don't know. We get closer to lunch, things will probably settle down there. I think, Don, I'm not saying it wouldn't work. It'll work for anybody to have a bias that it's retesting an area where there was a reversal. Let me give it a shot. And I did that yesterday in the chat room for a small trade. It was in the latter part of the day. So you have to be able to trade these smaller time frames. Just because we're talking about that and you see this pattern, that doesn't mean you're ready to do it. It could be something that just, cuts you up. You need to know about money management, share sizing appropriately and all that. And that's why we include the money management course with these current holiday deals. With 3 of the different courses, you'll get the money management course free. And it's the most important course. And it'll teach you how to leverage your trades, how to take the profits from trades and add them to a trade that you have, how to average down, which really, you might say average down. I've been told never to average down. Well, there are times where you can do that intelligently, because you're anticipating, I want in this trade, but I'm not so sure. And if it went lower, I'd want to add at the appropriate moment. So there's a lot of ways to make money in the markets, and we haven't even touched on options, but credit spreads and so on. If anything anybody wants to take a look at, we're happy to do it.
Somebody said CSX earlier.
So one of the things I love about this program is it gives me a lot of information. We don't have any connection with TC 2000. They're not affiliates. We're not affiliates of theirs. So it's just something that I've used for decades. But what I like about this, it tells me what sector it's in, the subsector, when earnings are coming out. Then I can look at the pattern. I got the daily here. It's pulled back to the 20. So it's a buy setup. I can look at multiple time frames very easily, which aren't the best here because it had a breakout and came back in. But still, it's in an uptrend. It's something that's been doing well. We looked at the transports. And when we did that, if you remember, we said, there's transports. Maybe if this can get above here, and CXX could be something that could lead the way. So when we click on this market, it loads the stocks that are in that particular sector. And now I can put different pieces of information within here, or just look at what's doing the best on the day, which is this particular stock, integrated shipping. And again, we do the same thing, multiple time frames. This certainly looks like it can go higher, even though the markets look questionable. UPS, kind of a shakeout, it is a shakeout pattern. Went down and came back up again. Probably needs a little bit more work. So let's just set an alert and keep an eye on that. Look at that. That's like it's called like a bull flag.
Yeah.
We'll see it where this ends the day. Potentially a red bar ignored right here where this turns around. Well, that looks great. Set an alert. So as it pulled back to the converging moving averages and it popped up and cleared, the red dot is just simply a bar with 3 lower highs to the left and right. No magic there. Just marks off what we call a pivot or a swing. And it took that out, which is a positive because that created resistance. And now it's not pulling back. You're welcome, Don. And you know what? We appreciate the questions, because if you guys don't ask questions, we don't know what's on your mind and we can't help. So don't hesitate to ask questions. I mean, that's why we do these empty lives. What is your secret data on the small pink background? Oh, this tells you what it is. Dividend yield. So this dividend yield is 1.5%. So as we look at different things, I want to know what's the dividend yield on that. So a little bit of fundamental data in there. Percentage change on the day, net change on the day, percentage change on the day. So I can see how many points it's up percentage wise, how much it's up. So you can change all of this information to what you want to see. How do you add to this toolbar? You right click on it and you click edit toolbar and voila. Then you just pick what you want out of all of this information. Which is a tremendous amount of information there. So you got to pick what's relevant to you that you want to see. But it's easy. Everything's easy once you know. So earnings, what the sector is, the industry, what's the latest float. So different stocks, different pieces of information that you might want to know. That is right at the tips of your fingers.
All right, Mara and Pfizer.
Yeah, so this was a huge winner this year with the Corona thing.
Well, Greg, that's Myrna. He asked about Mara, but go ahead.
Yeah, so you can see this thing is kind of trying to rebuild after a big correction. It's
a Bitcoin stock.
Yeah, Bitcoin, it had its big run, up to Bitcoin ran up to 70,000 and came back. Now it's at the futures are at 47,000, the futures. So, this is coming down to this prior low here, which, the bearish part about it, unless this immediately turns around, is buyers stepped up at the prior low and now it's failed. So if you bought here, you should be out. So the way we would approach this, if we were thinking about this as a long, is it would have had to have traded above that bar's high, which it never did. So it would have never triggered a long for us. But some would buy on the close because it's a green bar closing near the high to see if it gaps up. And, a lot of times they do. It didn't happen. So that looks like it's going to go lower.
Agree.
Yeah. So are you and Dan taking some time well-deserved off at Christmas? I'll probably take off a few hours. Yeah. So, we love what we do. And, half a day or whatever. Dan loves boating. He's always on his boat. I love boating. So, spend a few hours out on the water, relaxing and, whenever family and eat something, have a couple of drinks, relax, and but we'll be back at it. Retiring is not for me. I'm not one much.
Or your wife.
Or you know what? My wife, as you know, Dan knows, of course, she's from Bulgaria. We don't want to travel right now, but most of the years, we travel back to Bulgaria so she can see her family or they come here. But I don't think there'll be any traveling. Maybe next year we'll see how things shake out. So we will see what happens here. And, hope you've enjoyed what we've done. We'll do next week. We're going to be, review again, trades that you want to review. And
next week.
Move into next year. All the best.
All right. Thanks, everyone. Good trading.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.